Hey guys, it's Will here. I wanted to talk about the market indices and some of the sector ETFs. So you can use the same concept with stocks. If you've been watching my videos, you know kind of hopefully what my basic strategy is for swing trading, trend following type of trades. And so if we look at like the Nasdaq here, as I mentioned, I use the uptrend or as well as the 8 EMA. I like to validate those breaks of trend with the red volatility stops or the cross of MACD, price percent oscillator going down, like the momentum. And so moving averages are also important. So sometimes when there's a bit of a pullback, the candlesticks will be supported at the 21 EMA, or the 50 is a lower level, or even the 200. So I've talked about this in my last video. When the Nasdaq broke down, like I would have a stop, say at these green volatility stops, and once it crossed that, I would be out. But when you have a 50-day moving average nearby, you can see if it supports. Like this was, you'd have to stomach this drop way down here during the day, and then it comes back up above the 50, still above the 50, went way down below the 50, came back up. But what happens a lot of times is once it breaks the 8 EMA, which is this black line, it'll come back and test that, and then people think, oh, we're bouncing, they buy the dip, but then you have that bounce down off of the 8 EMA here. So now we've broken down below the 50. So people that use moving averages have seen it break below the 21 EMA as well as the 50 moving average. And now we're continuing downward. If you want to pick up a free trial of TC2000 software, which I'm using here for the charts, you can check out the link in the description. You can get $25 off too if you decide to purchase. I'm using the gold plan and the US real-time data. So I've got a little watch list here. So if you create a watch list, I'm just going to diverge for a second here. If you go to personal, I've got these watch lists. So one of them is called markets and currency. So that's like the Dow, the US dollar, the the VIX, the volatility index, Nasdaq SPY. So these are like my main indicators. This thing with this little cross here, with this little cross here, you can move the window and you can decide where you want to put it. So I can put it over here as a tab. I can put it in these boxes here, above and below, as separate boxes. So I just wanted to point out that I've got tabs here. So then I have another tab, which is all the sectors. So I look at the indices initially. You can see that we're in a lot of down things here. Down day today. Of course, these ones are still above the 50 and very close, so they could support. SPY is right at the 50, but Nasdaq already broke below, so that's in a better downtrend. So then if we look a little bit more at sectors, because some sectors will do well while others won't, so it's a little bit better way of seeing what's happening. I've got this sorted inversely by the negatives right now. So basically, you've got COPX, that just broke down below the 8 EMA. But a lot of the tech type stocks and growth are doing really badly because of the 10-year bond interest rate has been going up, is one aspect to it. So you have things like China Internet breaking below the 50 here. The ARK Financial is now broken below the 50. The SPAC is down. The YOLO, which is cannabis, still above the 50, but has been in a bit of a downtrend. The clean energy. So a lot of the ARK Ws and the growth, the genomics, they're all in the same downtrend right now. So what I wanted to point out was, if you have, like the way I would do it was I'd have my stops moving up below the price, which is at the green dot, and then also it breaks up way above, like it goes sort of parabolic. And then once it broke through and you have the red volatilities, and I wouldn't be buying this at all during this phase as it goes down. So this kind of validates a methodology that I have. So like this one here, it came up, it kind of followed the 8 EMA, which is one place you could use just as your stop, like a close, as long as it's above the 8 EMA. So you have this point when it's flat, so the volatility stops or the 8 EMA are pretty flat. But this day here, we broke it. We crossed it. We closed below it. So you would have sold here, either with a stop at that point or at the end of the day. You could sell because it didn't recover. And you have this red volatility stop, which is usually where it switches from green to red. And that often, the red dots can continue for quite some time. Sometimes it's a short-lived thing like this, but a lot of times that's a sign, of another downtrend. So during this whole phase, I'd be out of this. So this kind of shows you where that point would be where you would get out. A close below the 8 EMA, a red volatility stop, the cross of the volatility of the green volatility stops. And since we can see that the Nasdaq is now going down like this, what you could do is get into the inverse ETFs, which is PSQ is just a 1-to-1. So if you look at the Nasdaq, it also can help to look at it upside down so that you lose some of your biases. But I wouldn't have bought it right here because it was so close to the 50. So the 50 can be a resistance point. We poked up above it here, but once we started to confirm, like the second time, I would have, gotten in here, and you can profit from the decline in the Nasdaq. And there are leveraged ones, which would be there's more risk but more reward as well, with some of the inverse ETFs. The SH is the S&P 500. So like you can see here, it's just right at, it sort of hit at the 50, and it's right at the 50. So that's why I don't get in even though it's above the 80 EMA now with green volatility stops, just because it's so close. I like to see myself a break of the 50 EMA. Other things that are still hanging in there are the energy. I have the energy ETF. And also, this isn't a great one, but the soybean one, it's a bit of an uptrend, but it's somewhat flat. There's not a lot of great options right now, just because we're in that potential transition phase between going down and going, upward and downward trend lines. So because of the fact that the 80 MA is the 50 MA is close here, I probably wouldn't get here. But you can see how we're starting to have this green volatility today, and it's crossing back up here. Another thing that you can look at is a weekly trend. So for a stronger trend, you might want to wait for more of a weekly cross than just a daily crossover of the MACD and the 80 MA. It just confirms. So for example, on the weekly for the Nasdaq, we do have a cross of the MACD, and we're just this week, on a weekly chart, there is a green, which could change, but this is the sign of a potential uptrend. So that's all I wanted to say for today. If you want to get TC2000, check out the link in the description below. Talk to you later.